With that, let's shift focus to another stock which the market should be very fond of at this point in time, IIFL Holdings. The positive news, of course, was the new partner coming in, General Atlantic. Let's welcome Mr. R. Venkatraman, Managing Director, IIFL Group. Mr. Venkatraman, first up, your fund-based business outperformance outperformed the other divisions actually, while your capital markets business saw mild pressure. Any reason for this pressure on your capital markets business, and what's the outlook for the fund-based business? Does it do even better?
See, actually, if you look at our financial products, if you look at our fund-based activities, then we saw the aggregate loan book, which is about 15,472 crores, grew at about 19% on a year-on-year basis and about 5% on a quarter-on-quarter basis. So, as we have talked earlier also, the NBFC or the consumer finance business has been along with the wealth business has been a key driver of growth, and we are seeing significant traction in that business. Second thing is that we also have benefited from improvement in the gross and the net NPAs. Gross NPAs for the previous quarter, if you remember, was about 1.6% with a net NPA of about 0.8%. That has improved thanks to our collection efficiency and to about 1.5%, 1.4% for this quarter, and net NPAs about 0.5% for this quarter. So that has been and plus I think our cost to income ratio has also improved. So overall, I think our NBFC business is continuing to do well. Coming to our capital markets business, if you see the last quarter, which is Q2 of this year, market has been a bit lackluster. Plus in the month of August, we had seen the markets being hugely volatile. So exchange volumes are down. And if I can tell you, average daily equity turnover was down, if you remember, and by about 9% on a quarter-on-quarter basis. So basically, that is the one reason why we think that the capital markets are inherently volatile, and I think we are in the bottom of if I can say, a recovery.
All right, Venkat, just hold on to that thought. Just need to get your focus back onto the markets, because now the Bank Nifty is in the red, and this is the first time in the day that the Bank Nifty has moved into the red. Pressure coming in from names like HDFC Bank, Yes Bank, Kotak Mahindra Bank, all of them are down anywhere between 0.5 to 1%. So the market is now absolutely in flat terrain, threatening to break into the red. Venkat, hi, morning. Just coming back then to, a couple of other questions. Okay, I'll come to that in just a bit. Before that, just one word on the markets as well. As I was telling you, Asian Paints is your biggest loser, down almost about 4% and the volumes too are picking up in Asian Paints. But Venkat, in that case, you were telling us, about the revenues. What kind of revenue growth would you expect from the NBFC business in FY16, and what would be the driver of that growth?
See, actually, it's extremely difficult for me to give any forward-looking statement. So we think that going ahead, our strategy for growth in our fund-based business is primarily focused on secured lending. Secured lending has got multiple asset classes. I would say we are a multi-product NBFC, if I can use this word. We give a loan against security of mortgages, and then we also give gold loans, commercial vehicle finance, medical equipment, and capital markets. If you look at the overall composition of the book, our focus, as I had told in the earlier also, has been focused on home loans, and that is one segment which is showing growth. We have seen some kind of degrowth or consolidation in gold loan business, and gold loan as an overall percentage of the book has come down. And the other segment which we are seeing traction is the commercial vehicle finance. Capital markets, given the state of the capital markets, remains good. So going ahead, I can say that the home loans will be the key driver of growth, and we continue to invest in building the home loan capabilities.
Okay, well, actually, markets are beckoning our attention, Venkat. So let's move away from your numbers. What's the call in the market right now? There seems to be a bit of congestion in a narrow range, not quite able to emphatically move above that 8,300 mark. What's your sense?
See, actually, we think that the market is in a consolidation phase, and it will digest the news of this current earnings season. The second, I think, uncertainty is Bihar elections. I think the market is waiting and watching to see what is going to happen in the Bihar elections. Apart from these two specific things, on a broader long to medium term view, India is in a good state. The reason being simply because we are seeing the bottoming out of the macroeconomic indicators, and I think a gradual macroeconomic cyclical recovery is on the tracks, and so we are quite optimistic. And if you look at the rest of the world, I think China is having its problem, other emerging markets are having problems. So India remains a beacon of hope, and we think that it will continue to attract, it will remain an attractive emerging markets destination. And as and when we see the economic activity pick up, I think Indian markets should, we are optimistic of this, of the indices and the markets.
All right. Well, if you're optimistic on the markets, and what are you advising your clients currently? Are you asking them to build long positions or to keep out for a bit?
Basically, it is our advice to our clients is that if you have a 3 to 5 year view, you should remain invested and increase your positions, because we expect the cyclical recovery to take place. Indian macroeconomic parameters are looking good. Deficit is coming under control. India is a natural beneficiary of falling commodity prices. We are thinking that sooner or later the rate cut benefits will be passed on. So all in all, we think that we have a good story of a good story for India in the medium term.
Well, let me come to the meat of the question. What are your top picks?
I think we like the usual suspects. So TCS and Infosys in IT, and in automobiles it's Maruti, and risky bet will be telco in spite of the uncertainty relating to China, just simply because of the pickup in the domestic commercial vehicle cycle. On the pharmaceutical space, I think we continue to like Sun, Torrent Pharma, and these are some of our ideas.
All right, Venkat, thanks for joining us. Well, that's the word coming in from IIFL Holdings. We'll take a break, but coming up, telecom companies are in slow growth mode.